If you're eager to discover the secrets of success, then you've come to the right place. Today, we're diving into the remarkable world of Charlie Munger, a true titan of investing and business. His invaluable advice on wealth creation and life choices has transformed countless individuals into prosperous beings. In this captivating video, we'll embark on a journey through Charlie Munger's investment philosophy, uncovering the very essence of how he achieved his remarkable success. Get ready to unlock the power of compounding and witness how it can propel your wealth to new heights, allowing you to make your first $1 million and beyond. But it doesn't stop there. Munger emphasizes the importance of investing in oneself, nurturing personal growth and development. We'll explore his profound insights on why self-investment is the key to unlocking untapped potential and creating a life of abundance. Moreover, Munger's wisdom extends beyond the realm of finance. He encourages the use of mental models, powerful frameworks that guide decision-making in both investments and all other aspects of life. We'll delve into these models and understand how they can sharpen your judgment and lead you to wiser choices. Whether you're an aspiring investor, a lifelong learner, or simply seeking inspiration, this video is a must-watch. Prepare to be enlightened, motivated, and equipped with the tools to transform your financial future. Join us as we unravel the genius of Charlie Munger and embark on a journey to wealth and success. Charlie Munger's investment philosophy. Charlie Munger is a very rich person who has made his money by investing in businesses. He is known for working closely with Warren Buffett and being part of a company called Berkshire Hathaway. Many people all over the world have studied his ideas about business and investing. When it comes to investing, Munger believes in thinking long-term and spreading out investments across different types of assets. He thinks it's important to really understand the business and how it will make money in the future before deciding to invest in it. He says investing is like taking a gamble, but you need to be able to tell if the gamble is a good one or not. This is called value investing. Munger also talks a lot about the idea of competitive advantages. He thinks it's important to invest in businesses that have something special that sets them apart from their competitors. These advantages can help a business do well even when times are tough. For example, if a company has a popular and unique product, it may still sell well even if the economy is not doing well. Munger believes in being disciplined when it comes to investing. He thinks it's better to carefully analyze each investment opportunity and create value over time, rather than relying on luck or guesswork. He says it's important to be patient and stick to your strategies instead of trying to make quick profits. Short-term speculation often leads to losing money in the long run. The power of compounding. Imagine you have some money to invest. Compounding is a special technique that can help your money grow over time. It's like a snowball effect, where your profits from investments can generate even more profits. Let's say you invest $1,000 in something that gives you an 8% return every year. After 1 year, you would have earned $80 in profit, making your total investment worth $1,080. Now, if you reinvest that $80 back into the same investment and it still earns 8% the following year, you would make a little over $64 in profit. So after 2 years, your total investment would be around $1,166.40. What's exciting about compounding is that your money starts making money on its previous returns. This means that the longer you let your money compound, the more it grows over time. Charlie Munger and Warren Buffett, who are very successful investors, believe that compounding is one of the most important principles for building wealth. Munger once said that compound interest is like the eighth wonder of the world. He understood its power and how it can help you earn more money. But if you don't understand it, you might end up paying more instead. So it's essential to grasp the concept and take advantage of it. Compounding isn't just for financial investments. It can also apply to other areas, like education or career development. Investing in yourself, such as taking classes or workshops to improve your skills, may not seem important now, but it can have significant benefits in the long run. It can lead to better job opportunities, promotions, and higher wages because you have gained more knowledge and skills. Investing in yourself. Charlie Munger believes that investing in yourself is crucial for building wealth. He thinks that investing in your knowledge and skills can be just as valuable as investing in stocks or bonds. Here's how you can invest in yourself, according to Munger. Learning new skills. Start by learning new skills that can make you more valuable to employers or potential business partners. You can find free online courses, attend seminars at universities, or join organizations that offer educational resources in areas like finance, accounting, marketing, entrepreneurship, and leadership. Going to conferences related to these topics is also helpful, as you can meet people who share similar interests and gain advice from them. Networking with successful people. Another way to invest in yourself financially is by networking with successful individuals. Attend events organized by local business leaders, or join professional associations where you can connect with people who have expertise in personal finance and career development. Additionally, look for opportunities within your current job to build relationships with higher-ranking colleagues. These connections can potentially lead to higher earnings and greater job satisfaction over time. Taking calculated risks. Don't forget about taking calculated risks when investing in yourself. This means exploring different opportunities that may require some upfront investment, but have a high chance of providing good returns in the long run. For example, you could consider starting a side business or pursuing a new venture. However, it's important to research thoroughly and make well-informed decisions before committing your money to any endeavor. Charlie Munger also has 3 rules for a successful career. Don't sell anything you wouldn't buy yourself. This means maintaining high standards of quality and ethics in your work. Don't work for anyone you don't respect and admire. It's important to align yourself with people and organizations that you truly value and find inspiring. Work with people you enjoy. Building positive relationships and enjoying your work environment can contribute to long-term satisfaction and success. By following these principles, Munger believes that investing in yourself can lead to personal and financial growth, ultimately helping you achieve your wealth-building goals. The importance of mental models. Mental models are like tools that help us make decisions. Charlie Munger, a successful investor, believes in using mental models to make better choices and achieve financial success. Mental models are different ways of looking at the world and understanding things. They help us see problems from various perspectives, leading to creative solutions. For example, let's say you're thinking about investing in a stock. You can use the margin of safety mental model, which means assessing the risk involved before investing in something uncertain. Another helpful mental model is the Pareto principle, also known as the 80-20th rule. It says that roughly 80% of the results come from 20% of the causes. By focusing on those key causes first, you can achieve better results more quickly. This principle can be applied to many areas, such as marketing campaigns or budgeting, where you want to maximize impact with limited resources. Understanding incentives is another essential mental model. It involves considering why people do what they do based on their motivations and goals. By recognizing and taking into account incentives, we can avoid making mistakes due to misjudging someone's intentions. Munger emphasizes that incentives play a significant role in shaping outcomes. Having a variety of mental models gives us an advantage in decision-making. They help us think creatively and consider multiple perspectives before reaching a solution. These models also simplify complex situations, making it easier to understand and make informed choices quickly. By using mental models, we can reduce risks and improve our chances of success in different areas of life, including finance. Thanks for watching. Don't forget to like, share, and subscribe so you don't miss an upload and you can enjoy the excellent content I send your way.